We've got a special panel joining us on Business Tonight. State Bank of India's Managing Director and CFO, Mr. Divakar Gupta, Siddharth Sanyal, Chief India Economist at Barclays Bank, and Sunil Munjal, Joint Managing Director of Hero Motor, of course, our banking editor. George Chervian is also right here to participate in that discussion. Mr. Gupta, I want to start this off with you because the big question is this going to be entirely passed on to the end user? We understand there was a meeting of the ALCO of State Bank of India as well just a short while ago. What's the verdict there?
You know, I've been maintaining that the repo rate is a signal rate. It does not affect the bank's balance sheet in any way per se. Now, that signal is expected to translate into some lower deposits, which means lower costs. Those costs then get apportioned to, passed on to the borrowers. So this transmission takes a little while. What we recognize is that Reserve Bank has been very, very positive in having given a 50 basis points cut. And we therefore owe it to ourselves to see where we can rationalize rates on deposits and then eventually pass them on to borrowers. We have gone on record to say that the CRR cut itself will help us to do some of this transmission, and maybe the SME segment will be the first to benefit.
All right, Siddharth Sanyal, if I could just come to you. The RBI has said that it wants to adjust policy rates to levels consistent with the current growth moderation. I'm quoting from the RBI document out earlier in the day. Now, would you say that given the growth challenges that we face, given the inflationary challenges we face, we merited a 50 basis point cut earlier today on the repo rate?
Well, if you just look at the growth challenges at the moment, a 50 basis point can clearly be justified. However, so far RBI had kept a stance that the inflation worries are still high. Not only high, they're high and rising at times. They had been highlighting quite a bit of suppressed element in inflation. So we really didn't expect it. So that way it had been a big boost. And additionally, I would like to mention that it's not only a relief on the part of repo rate. RBI has given quite a clear, almost a promise that they will keep supporting the liquidity also going ahead from here on. So as a whole, the package comes as a big relief for the system.
Okay, a big relief for the system. Mr. Munjal, you just heard Mr. Sanyal say that it's something that he wasn't expecting. To what extent are you seeing this rate cut then as an aggressive or perhaps a bold one? Does the 50 basis point cut come to you as a surprise?
You're right. The industry is actually quite delighted that the RBI governor has decided to announce a 50 basis points cut in the CRR. In the repo rates. Because there was an expectation there would be a cut. The expectation had been built up for at least a 25 basis point. It was not only 25, as some of us actually said, but it was for at least a 25 basis point. So I think broadly people are quite happy, not just at the actual cut, but also the signal that this is the direction we are going in now.
Fair point, Mr. Munjal. Mr. Gupta, even as industry cheers this rate cut, the big question is, I think the governor has made it very clear that he has very little scope for further rate cuts. Would you agree that as far as this year is concerned, this is about as much as he can do until the government acts?
Well, I think I've been hearing those comments of pessimism through the day. I think the governor has done more than his bit at 50 basis points, so there is no reason to read pessimism into his statement. All he's saying is that there is a lot that needs to happen now to sustain the momentum that Reserve Bank has tried to build up. It was a very small window. He has made the maximum use of it. He could have just gone with a 25 basis points cut. But we have clear headwinds on inflation, on the balance of payments, on fiscal deficit, on suppressed inflation on oil and energy. So I think those need to get managed. Sentiment needs to get managed, and that is what he's saying. I personally would think we will have more rate cuts, but provided some of these factors don't play spoil sport.
Sure, but Mr. Gupta, almost all the bankers we spoke to earlier in the day said that they will in some way lower interest rates, lending rates that is, and the benefit will be passed on to borrowers over the course of the next few weeks possibly. On the deposit rate front, how able do you believe banks are in a position to pass actually lower deposit rates simply for the fact that you are today competing with tax-free bonds, you are competing with other institutions, there is already a crowding out of deposits by other institutions. So your ability to cut deposit rates and the fact that deposit growth is lagging credit growth, should we expect to see deposit growth go down, or do you believe that deposit growth rates will remain at elevated levels?
No, it's certainly a challenge. You're absolutely right. Today the depositor has a lot of choices and we are not the best in terms of giving a return to the depositor. But then I think personally I believe a lot in our franchise for its ability to garner large volume, low ticket from tier 2, 3, 4, 5, 6, which is not going to be so sensitive to the other documents that you just mentioned. I think liquidity is reasonably comfortable and we should see good deposit growth. Given the fact that credit growth is not as robust, there is headroom to see whether deposit rates can be tweaked without hurting the banks.
Right. Mr. Sanyal, I'm going to bring this to you now. To what extent do you think the ball is now in the government's court, really? The RBI on its part saying, hey, we did what we had to. It's your turn now to act.
Well, that's a very interesting point. I'd put it this way. So far, the RBI had been saying that some amount of fiscal consolidation is required. Now, at least on paper, in this year's budget, we have some amount of fiscal consolidation. RBI is acknowledging that. Now, RBI is taking the issue to the next level. They are suggesting improvement in the pattern of expenditure by the government, which is a very, very logical demand. They are suggesting that, well, I have delivered a bit of what I would have required to do. I have reduced the rate. I'm giving some kind of certainty to the liquidity situation. Now you have to take the lead in terms of putting money into big investment projects, which will be crowding in other private investments. That's a very theoretically that's a very strong proposition. Having said that, I would say that given the current fiscal health of the government, I would really doubt whether that will really materialize soon. The way I would be reading this particular aspect here, that RBI is actually relieving itself from some kind of additional pressure of additional rate cuts in the near future.
Okay, RBI relieving itself from additional pressure as far as rate cuts. Sunil Munjal, sitting in Delhi, you probably have a better pulse of what New Delhi is up to. What's your sense? On the back of this cut, do you see a strong recovery in industrial growth?
See, there are two things which were happening. One was, this was the tool or the weapon that the Reserve Bank used over the last many quarters to manage inflation, which was worrisome. And clearly, inflation has got moderated over the last some months. It's now below 7%. And the worrisome factor was that growth has started to slow down. There were clear worry taking place on the growth numbers, especially in the industrial growth numbers. And this should certainly be a positive move, because small, mid-sized, and even some large companies were finding it hard, one, to access funds, and then to be able to service funding at this cost. Because don't forget, this is the time when interest rates are at historic lows across the world, except in a few countries like ours.
Right. Siddharth, if I could just bring it to you, you just made the point about the RBI relieving itself of any pressures on it in the near term from external forces. Now, the RBI has thrown the ball in the court of the government, asking it to get the fisc in order. But how much do you believe the government is actually going to deliver on that front? Because petrol prices is a classic example. It's a deregulated fuel. Oil marketing companies are still not being allowed to, right price that fuel for political reasons. The Congress is in its possibly worst political spot ever that it's been in recent years. It's got thrashed in the Delhi civic polls just a short while earlier this evening. Given all these political compulsions and given what we've seen happen with petrol prices, how much do you expect we should see progress on the issue of deregulation of other fuel categories?
Well, I'm not a political expert. Let me not get into the political angle of it. But even from a purely economic perspective, there are certain headwinds for the government to go ahead aggressively with that. See, the RBI's demand is that government should put large chunk of money into investment projects. Now, government clearly doesn't have that much of fiscal freedom at the moment, so that it can actually increase its capex. So I'll really be surprised if the government manages to do so. I'll not take that as my base case. The second issue, whether government can meaningfully reduce its fiscal burden in terms of reducing subsidies, looks very difficult, because some amount of token pass-through in fuel prices to an extent will take place in the course of the next few weeks or next few months. But if the government tries to do that in a very aggressive fashion, that will start putting pressure back on the headline inflation numbers, which will also be a part of the inflation expectation build-up process. So it's a very difficult choice for the government also.
Right. Mr. Gupta, what about CRR? Because many in the industry are also hoping that there'd probably be another round of CRR cut because we are facing tight liquidity pressures. Were you surprised that the CRR was left untouched, or do you think we'd see more action on that front later?
You know, personally, I was not surprised that CRR was left untouched. We could have had a combination of 25 basis points on the repo and 25 on CRR. I think CRR is a tool the Reserve Bank would like to have in its hands in case it is required to use it in a tougher situation going forward. For example, if it were to intervene in the forex markets, or if liquidity were to really get much worse. They wouldn't like to lose all the, all the tools at their command all at once. I would think 50 basis points repo cut is good. As a banker, of course, I would have welcomed the CRR cut because that gives me immediate bottom line.
Right, but of course, as the man who runs business, Mr. Munjal, were you disappointed that CRR was not cut further?
The indication this time was that there would be just a repo rate cut, but clearly going forward that's not going to be enough. The Reserve Bank will have to and should certainly review liquidity as well and focus on CRR reduction. Because while they have reduced CRR over the last some months, but clearly you need to bring more liquidity into the system.
Right, a quick word from you, Mr. Gupta, on the regulatory front. There have been some regulatory changes that the RBI has made. The point about foreclosure charges on home loans going away. More importantly, ATMs, allowing of white label ATM networks, essentially allowing third parties to run and operate on own ATM networks. Should we expect that some banks will actually exit their own ATM operations, pass this on to third party service providers and just focus on running their banks? Is that something that we can expect, and should we see it happening?
No, I think worldwide aggregation and economies of scale are the order of the day. So any model which can cut costs would be a welcome model. The white label ATM is also a similar example. There are two challenges and they need to be tackled. One is operational, because white label ATMs could possibly be prone to more frauds than dedicated ATMs of a bank. And the second is cash management. So today we need to evolve cash management services to a higher plane at much better cost in order to be able to service ATMs. Otherwise, with a large network of ATMs, their going out of cash could be a distinct possibility. I think once you manage those two challenges, certainly the smaller banks have it's in their favor to outsource or ride on somebody else's platform.
All right, Mr. Divakar Gupta, we leave it there. Thank you so much for joining us in the studio. Siddharth Sanyal and Mr. Sunil Munjal, thanks for joining in as well. George also adding that perspective right here on ET Now.